This is Justin AMZN on Monday, July 29th, 2019. Taking a look at this triangle that has now broken down. Broke down today, this being somewhat of a primary retest. Almost gets up into the opening of the triangle, kind of up here. Not quite that far. And then this is kind of the secondary retest that does get back up to the opening of the triangle. I guess what I'm picturing is the triangle being something like this and this, with an apex pretty much a little bit above where today opened up. And I guess we can bring this in a little closer, hit the highs in here a little better. Doesn't quite get into the highs here, but it's still range bound. This doesn't either. So yeah, if we bring this in a little tighter, you really start to see that where things were opening up today was already, and we can draw it now like this, but would have given it some more room. I think I did give it some more room yesterday. Doing the setup, seeing it be a bigger triangle here. So anyway, with this framework, so we've already broken down the orange triangle, and now we formed another triangle with all this after hours earnings reaction. And then all Friday really went mostly sideways, very much range bound within this triangle. And now, today we're breaking down. So this is where this actually opened. It's a bearish gap and go. And it did not give you very much of a rest or a retest. Right out the gate, broke down through the 1925, put in a high wave candle right here, and this is the highest it retested. The bulls couldn't push these prices back up anymore. Came right into the 5 and just continued lower. So we had 1, 2, 3, 4, 5, 6 bearish candles in a row. A little bit of a rest here, and then it made a bearish engulfing and another bearish candle. This is the S curve that you got. Otherwise, you run a smaller time frame. But on a 5-minute, this is your S curve. Doesn't even get into the 21. Rolls right back down. And then I had to go back and figure out, what is this line doing here? Where's this from? And I had to switch over to the hourly to figure out where it was from. It goes back to June 11th. Oops, I have it right here. So it goes back to this high and the lows through here, and looking at where we could interact with, pretty regularly with some of these prices, because some of these hold better than others, and some just really repeat nicely and others do not. But I was seeing in this no man's land, I was seeing that this price was holding up pretty well in here, and I did not draw this straight back then. It was not a straight, I mean, it's a line, but it didn't hold a horizontal level. And then the price that came into play today looked like we bounced nicely off of that, especially on an hour. It looks like we came right back down to that price and had a great bounce on the 5-minute. Very similarly, we just pushed in a little bit lower, and if I were to change this to the same price, 1983 price, the 1983 was really right in the range of this candle. They're on the high of this candle. So slightly lower than this, but what's interesting is that this candle that seems not to touch at all would actually have its high in the range of where this line would be had I drawn it straight. Just a really interesting level to see come back into play from last month, and see us bounce nicely off of that. If some folks were getting in bullish here, they got stopped out on its way back down. And if anyone was going in bullish here, bears started to roll this over right here, similar to this one, with a bit of a high wave candle here and a high wave candle here. Only this time it worked, and the bears did not win pushing this lower, and the bulls did end up winning, pushing it back up. We actually held pretty much this evening star reversal. We held the lows through here, where we didn't really do that earlier. So here's your evening star reversal, and 2 candles after that, you're taking out the low. Well, right here, we held this low the rest of the day. It's like, nope, we're not breaking down this area or this area, you know, any of these breakdowns. You know, we held this down here. And that was actually really close to this initial low. Once we took out the low, I should say, we held this area again, which if you kind of squint, makes this start to look like a shoulder and a head and maybe a shoulder here, because you didn't really get another shoulder here. But even if you do that, that would make your neckline kind of an angle, but inverted head and shoulders, and then that's mostly flat. But anyway, with the idea of this red triangle being the breakout of the purple, or the purple, there's no purple unless someone's saying purple. Orange triangle into a red triangle. Now the question is this a retest, and is this an S-curve to continue lower and will push even further lower? Totally possible. Or is this a nice hammer just a bit above this support here at 1880? And are we going to bounce from here? That's the question we're dealing with right here. What's nice is if we can get something going up above and get a close above this level, it looks like we're going to stay in this range, stay in this uptrend channel here. If we can't get back up here, if we can retest from below and start to roll over, you know, maybe we do actually push a little bit higher in a retest, maybe up to 1925 and then roll back down. That, you know, would be entirely possible to see things roll down yet again. And then it's a question of, okay, how much lower could it go? So we've lost pretty much all of our bullish momentum. It's totally fine for this thing to go sideways, or even put in a bit of a flag, look like it's going bullish, and then break down bearish. I was trying to find a candle recently that was similar to this at a location similar to this. And if you look at this channel, we had a hammer like that here. We ended up closing bullish above it the next day. Now the one that we've got here, we've got a close that's a bit lower, doesn't actually hold the level. So it's already showing us that we're a little more bearish than this one. And this one was actually a gap up, a bullish retest gap, whereas this one is a bearish gap and go. So it's just nice to see a hammer in this area, but the sentiment here is much more bearish than it was here. Granted, we're much higher, and so it's okay if we have a bigger pullback from here. And then this one, it was just starting this rally and the bullish rally we've been in. So very different locations to be comparing, but really focus on comparing the candle and what else is happening at the time. You know, we've got the 21 that's way above the 5, and then after this, the 5 curves back up. At this point, we've only just crossed the 5 below the 21. We've got this bearish momentum that is shifting more bullish. Right now, we've got this bullish momentum that is disappearing and about to switch into bearish momentum. If you go back a little further and look for a hammer, we have this one, which is a bullish hammer. And this was kind of the first time we touched down, pulled back a little bit further into a channel that I don't think we had exactly drawn yet. But that was after really long consolidation, and it's kind of a head fake where it looked like it was breaking out, then all of a sudden it's rolling over, and then it rallies. And if you consider that kind of a hammer sentiment here, this kind of looks like it's you know, a double top that's rolling over. And the question is, just like this one, what are we doing tomorrow? You know, can we get a gap up? Can we really start to rally strongly out of this? To do that, we really need a gap up, and we really need to see a candle like this form and get us right back up, unfortunately, into the neckline first and then continue. Or can it get us higher and, you know, catapult us higher and higher into another bullish phase of this? So just looking at a couple recent hammers in their lower channel range to see what this one could do. And, you know, it's something new, something a little different than before. Let's see if we have any hammers in here. A hammer up here that was holding the low really into the channel. Small one here. And then, I mean, we can go back to this. So we had some of this kind of multi-top. I mean, that made a new all-time high, but it kind of looks like a multi-top that pulls down into a hammer here and then bounces. All these have, you know, a bullish move within a few days after or the next day after. Even this had another bullish day and got us bouncing. So that's really the question is should we be down here? You know, I've asked that before when we're up too high. You know, when we were up here thinking we shouldn't be up here. This is something, it's like too easy to get back up here and then it rolled down. You know, was it too easy to get down here and our bunch of bears are going to be trapped tomorrow for this thing to gap up and just run? We've got some resistance ahead, so you know, be cautiously bullish, but we're in a bullish trend. So you know, if we can get going bullish, look for a pullback, look for an S curve on its way up. We had that on the 5-minute. In here, we were breaking out S curve and then continue on up. So this was a nice place to get in bullish, you know, at the break above these candles. And if we go look at some of the options, with a bearish move, you really need to be in bearish out the gate or within, you know, the first couple of candles here. And then your next opportunity was right here, and it didn't even touch the 21. And so if you're just looking at locations, there wasn't even a wick or anything to get back into with this one. It was more so what the option price was and knowing that you're bearish and giving you the opportunity. So with these candles, this looking more like even a reversal here, starting to break down, you're getting in as it's going in the direction you want it to go, and that would be getting into puts. So this is the 1875 put. You know, if you're able to catch any of this, you had an open order sitting up there for like $6. Maybe it fills over here. Maybe you got filled, you know, for 5 as it's opening up, and then you're just getting out somewhere along here. You probably left something on the table. If you got it in, let's say you somehow you had an order to sit out there at 5, and you get out at 10, and you left, you know, another 3.5 hour on the table. You know, just look to reload. So you got out at 10, look for that $10 price, comes back down, and 10 by 9, unfortunately, would have been you stopped out down here. But waiting for this to happen at 950. 950 was this candle. Waiting for this candle to happen and then setting up the trade. That would have been your single candle confirmation. That would have been 950. There isn't even a 955 candle. But at 10:05 and then again at 10:15, there's some candles that let you buy it at $10 and a stop down at $9. And you could have taken that up to about 13. That would have been 3R, you know, going from 10 up to 13. And also it's 10 by 9. I like that setup, you know. But that would have worked really just this once where it kind of did that S curve into it and then continued. It didn't really work over here because it just wasn't continuing bearish over there. Now the calls, these were a little trickier, and even this one I'm not crazy about the put value. I was looking at the 1900 at first and just thinking, wow, these are really expensive and really hard to do a $100 risk. So I went out to 1875, and I liked that better than the 1850, just because the 1850 just wasn't really worth that much. Easily could have done a $100 risk, you know, getting into something like 4x3, and you know, it did move up, you know, moved up nicely, and you know, for a smaller account, this could be something a little more conservative. But the reward wasn't quite there as much as, you know, I was hoping to have. So this one would have been buying like 5x4, and you don't even get up to 2R. So you're going to scalp out at, you know, an R up at 6. You really would have had to have that set up right out the gate, like 4x3, or setting it up as it's about to move, and hopefully you get triggered in at 4, and then you're just going to ride that as the stock breaks down, and you're in at 4 with the stop at 3, and you get out at 6 or 650 or something on its way up. Probably 6 because it kind of paused here, pushed higher, and then retested. So the 1850 could have worked, 1875 could have worked, 1900 much more expensive. If we look at the 1950 calls, you've got, right in here, this $4 price range, which was really nice. Even that when it started to bounce, pull back, it was just above 4. So you could have been doing like 5 by 4 or 450 by 350 and had a couple opportunities to get in here or here. And then just holding on for the ride as it just kind of grinded higher the rest of the day. It actually would have worked to just buy here or buy here and just to hold this and look to get out once it pushed up a little bit. At any point in here, though, it could have rolled over because it was pushing into this resistance of that previous roller. And so you got to kind of know, what to look for, where to tighten up your stop, and where to just get out when it's moving in direction. And this was another one that, the short-term trend right now is more bearish. And so if you're just getting into something bullish, just look to get in and out quick. Look for an R pretty quickly or half an R or something that you're going to be able to just scalp and get out, and not be in the situation that you're hoping it's going to continue to do what you want it to do. So, yeah, it really comes down to what we're doing tomorrow and maybe the next day too. See if we can continue up, and if we can't continue up, look for either sideways to down, and for it to build up some consolidation like we've done, in some of these rests and some of these, and a lot of this for 2 months. I don't expect this to happen where we go sideways for 2 months up here. But if it does, that bullish move is just going to be waiting, and it's going to be huge when it happens. Let's see. What else could we picture going on here? I think if we connected this, we got close with this one, we'd be, a couple more months out before that uptrend line catches up to around even the 1800 price. So I think we got a ways before we'd have another bigger pullback if we don't start to do that this week. I think we'll hold this and then probably have a fake out similar to what we had over here, or fake breakdown, and then ultimately launch from there. Almost kind of like a springboard effect where it comes down and starts to push lower, and then all of a sudden, nope, that was it, go, and it launches. We'll see if that kind of thing happens here. That's what I'd like to see, not to say it's going to happen, but we need that bullish momentum to come back in, whereas like this, we were already bearish for so long, bearish momentum for so long. Last time we lost that bullish momentum, we came down quickly like this. It was kind of after a double top, push down. Here's a hammer candle. We pushed down below that. Started to maybe bounce a little bit and came right back into that neckline and rolled over. So if we do this again, we'll do it here, and we'll probably get back into the 1700s if we pull back like this kind of a move. It could totally push higher up to like 1950 into the neckline, just like this did, or 1972.50, and then roll down. And like I said, if it does that, it's going to give an opportunity to be buying lower. While we're talking about it, let me just sketch a very rough, very rough angle on this. Okay, so we came to that low. Yeah, I don't know that we're ready to go down that far again into the 1500s, unless something crazy happens in the market and we lose a lot of value. Then look for it to come down to about 1500, low 1500s over the next month, if something like that happens. See if we can catch this, bounce off we did here, and then we're continuing bullish. On a bigger perspective, this is a really nice double top, and so if it holds here, it's not really a completely formed double top. We're zoomed way out, so I'm sure you can look at this cleaner on a monthly, definitely a weekly, maybe a monthly actually wouldn't work too well because we're looking at just, here's a year. So to turn all of this into 12 candles, I don't know what it would look like and if that would help at all. So, but I like seeing all the ebbs and flows in here. So let's get rid of this. Hopefully I didn't draw anything that I didn't want. All right, kind of resetting back to what I like to see here. So yeah, we'll keep an eye on things this week and see what we do. This was similar to some of the U-shaped candles we've had here. It just didn't get going bullish as much. We actually had a lot more bearish move and then bounce. And so it still comes back to kind of this inflection or reverse of what we've seen before. Today we had really a reverse of this candle. We initially sold off, and I know there was a bit of a bounce in here, but we initially sold off and then, had a push lower and then ultimately bounced and kind of rallied a bit into the close. And that's what happened here, describing this one in reverse. So hope that helps to make some sense of what's going on in the chart and candles, individual candles, patterns. And we'll be back this week to see how things are playing out. Hope you enjoyed this video. This is just AMZN. Thanks.